Hey guys, welcome to another Trade Genius podcast. Philip here with Bob. You're not going to want to miss this video. We have a big discrepancy in what the government's telling us employment numbers look like versus reality. You're not going to want to miss this, so let's dive in.
Trade Junior.
Okay, Bob, so we had a really interesting graph kind of start circulating on the interwebs, and it showed us this discrepancy. And I know you can explain this much better than I can, but there's a 2.7 million difference in what it seems like reality is versus what the government is telling us, which seems to have, at least for me, a lot of big implications on the economy. So can you explain what the heck's going on here?
I know you're going to be shocked to hear this, that the government is fudging their numbers. Yep, I know.
Shocking.
Sorry, folks. Your faith in government might be tinged here a little bit, but it's funny because you and I were talking as we prep for the show. This isn't the first time this happened. It seems to show up every time the government wants to look better than they are. And really, the difference between these two surveys is where they actually are surveying people. Mm-hmm. And versus the BLS number, which is the number that's gapping up, they have basically fudge factors, just like they do with inflation. They have these birth death models and things of that nature. Remember when Biden was telling everybody, I created all these jobs more than anybody ever? Well, yeah, you could create it if you control the Excel spreadsheet. And that's exactly what we're seeing here. And what happens here, this like snaps back like an alligator's mouth closing. At some point, they'll do an adjustment to this at some point in the future when nobody's really paying attention and snap it back. Why are they doing this? Well, first of all, they're doing it obviously for the midterms, right? The party in power wanted to, share with people how well they're coming out of the pandemic. Their response was the right response. They're the party you should trust, yada, yada, yada. But I have a more sinister view of this, too. Remember when Jerome Powell said that the only way he would probably stop or pivot or reduce is if employment fell off? Well, here we have it. Okay, so employment is flat. And if this was the number that they presented, can you imagine the pressure on him and the Federal Reserve to not continue to raise interest rates?
Right.
And the only thing I can think of, Phil, that they're raising interest rates for anymore is number one, to have a cushion when they have to collapse it again, so they're buying time. But number two, we talked about this in the video before the weekend, is they're worried about the dollar. And the only way they're strengthening the dollar now and putting pressure on other currencies around the world like China and Russia and and the other ones is by making King dollar the strongest currency out there.
Right.
But if we start losing that gap between other people's interest rates and ours, the dollar will tumble. And when the dollar tumbles, that means all the risk assets that they don't want to go higher will go higher.
Right.
So I think this is what's really happening here, Phil. I mean, you and I could talk about this for 4 hours, but the bottom line is that they're putting a lipstick on the pig because it serves the interest of the government and it serves the interest of the Federal Reserve.
Yeah, that's a great point, right? Because they've flat out said they want to see the labor market cool, and they're using that as an excuse to raise rates. I think they have a small window. My take is they have a very small window here because I think we're going into a global recession. I think we've seen some data points, which we can probably expound on in another video, where it's not just we've shown you like the yield curve inversion, but I think we're a full on global recession is coming, and when that happens, they can't hike rates. They're going to have to pause. And the bond market is telling us this. So I think that's a great point that you point out here, that they're fluffing this to just go with the narrative that they have to raise rates. In reality, they know, regardless of what this graph says, they only have a few months to do this, to pull this off. And then they have to let their foot off the neck of the market, or the rates anyway, and pivot and then cut.
Yeah, and we'll be talking about these over the next couple months because one of the trades is already starting to work. I was kind of shocked, and maybe we'll talk about that this week, that a trade that I didn't think would kind of lead, But just remember when you guys think, who are the smartest traders in the room, right? It's the forex traders, then the bond traders, and the stock traders. So those are the areas you watch first. You watch the forex market, then you watch the bond market. And we're starting to see some things breaking in those areas. And I think you got to pay attention to it because the stock market usually has to get hit with a 2x4 by the other two markets, and we're starting to see some changes there. But I'm going to tease you for now, and we'll help you position yourself going into 2023 to be on the right side of this because 2023 is going to be a very interesting year, and I don't think they could keep the plate spinning very much longer.
And I think too that we're, without getting too much into what we'll probably cover next week, I think we're getting very close to a top in this bear market rally. And I think it's going to be a significant area because I think this is where we make our final lower high and this bear market like washes out from here. And how you play this going forward, you're going to want to really follow us in this channel because we're going to be telling you what to expect. And, anything can happen, but with the liquidity maps and all of that other stuff that we've been showing you guys, it's really reliable information. And so it's just a matter of interpreting it, figuring out what the best way is to hedge yourself, and then just getting through this. We're all going to make it through 2023, but if anybody's telling you it's going to be rosy, that's just not reality. We want to give you reality, but we also want to give you the tools to make it through, because when you do make it through 2023 and 2024, you're going to be way ahead of the pack, because if you can protect yourself from the drop that's coming, you're going to outperform everyone else. Even when everyone's piling back into the market in 2024, you're going to be so far ahead of them. You're just going to be riding the wave back up, and they'll never catch you in terms of performance because you're over here taking advantage of the dip. And that's what we want you guys to take advantage of when you're listening to us or when you're with our service. That's our goal, because we only have so many. Me and Bob only have so many years left to be doing this, but we know that we can be successful, and we'd sure love to help you guys get there. So, and that's really why we do this stuff and we share this stuff with you guys, is to help, the greater good, basically.
Yeah, absolutely. So stay tuned. There's some really interesting stuff. When we started doing this, I said, I don't know if we'll run out of information, but my gosh, it's just like served up to us daily on a platter, and fun stuff. I think, the thing is, when you have tools and you know how to use the tools, you don't have to panic. And the beautiful thing about the trading in the markets is that it is two-way. So there's ways you can trade the market both ways without taking on excessive risk.
Yep.
And hopefully we will help you with that. And just remember, the big money can't move without the little money seeing it. It's just that the little money gets confused because they're listening to the big money people talking and telling you there's nothing behind the door, okay, while they're preparing the door. So we'll help you get past that noise too. But anyway, fun stuff. And I know, I hope you guys can restore yourself trust in government again soon, but not for the employment report. It's going to get, what did that guy say in 2008? When things get real, you have to lie. Okay, they're lying.
That's almost man. Well, one guy I know, there was a hedge fund guy. He said, "Phil, there's no honor on Wall Street," and it's true. It just, what it means is it's just a very robotic environment, and it's whoever performs the best wins. And so there really is, like, if they find a loophole or an advantage to get ahead of their competitor, they're going to take it. Even, if Bob ran a competing fund, that just means I would figure out a way to outperform him any means necessary. It's a very cutthroat business. And so, it's unfortunate, but that's the world we live in. That's a money-based society, unfortunately, at the end of the day. But we can just help each other, reading what they're doing, reading the games that are being played, and ultimately at the end of the day, we're riding their coattails, essentially, the big money coattails, to hire investment portfolios for ourselves. So that's all we can do. Yeah,
I really appreciate everybody. Thanks. Hey, like and subscribe. Tell your friends about this. We get really, really good feedback, but we want more friends. So thanks if you do that for us. I really appreciate it.
Yeah, I agree. All right, guys, thanks for watching. Like Bob said, please hit like and subscribe. It really helps us out. We really appreciate that. And we'd love to hear from you guys in the comments below. Don't hesitate. Don't hold back. Let us have it down below, and we'd love to hear from you guys. All right, we'll see you on the next one. Take care. Bye-bye.
Trade Genius.